Today's workshop, like you know, is going to be focused on rental car coverage. It's not a coincidence that we planned this workshop for March. Some are looking forward to spring break or potentially getting out of Michigan again, and likely going to be renting a vehicle. So there are, of course, the age-old question coming up, which is, how does my coverage apply when I rent a vehicle? And it's a bit of a more complicated question than the short answer of it probably does. We're going to jump into that. We're going to follow that up with a brief conversation about home insurance coverage, talking about replacement cost compared to market value of your home. That, of course, has been a very hot topic over the past year as we've seen market values climb, and we've certainly seen building costs climb. There is no secret about that. So those are going to be the two topics of today. Our next workshop, which is scheduled for April, is going to be focused on first-time home buyers and on teenage drivers. So if that is interesting to you or anyone in your network that would benefit from that conversation, please, of course, join us in April. Now with that, Derek, let's get it started here.
Okay.
Again,
Brian, are you going to, we're going to record it, right?
It is going to be recorded. Yep, you're correct.
Okay, so if anybody on the call prefers, not to have your full name or video or anything like that, feel free to modify that now. We are going to record this for future distribution or for clients that couldn't attend it. So,
yep. Thanks for that reminder, Derek. So, workshop agenda part one, like we said, the question is, can I waive the coverage offered for a rental car? If you're anything like most of us, you've shown up at the front of the counter, you've been excited to arrive in Florida or Arizona or somewhere in the Keys, and you can't wait to get off on your way. They say, do you want to buy coverage from us? You think, I don't want to, but should I? I don't know. And I don't care. I've got a margarita waiting for me, and it's time to get off on my vacation. We're going to talk about whether that's the right choice or not. Then we're going to touch into part two about the replacement cost piece differing, or how does that compare to market value. That's going to be specific to your home. So part one, rental car coverage. Derek, let's jump into that. What's the general rule?
Yeah, sure. So the general rule when it comes to your auto insurance policy is that it applies to the vehicles that are listed on it. So you're going to see the vehicles that you're very familiar with. And it also applies to vehicles that you do not own if you're using them with the owner's permission. So a couple of the examples that are listed here: borrowing a neighbor's vehicle, borrowing a coworker's vehicle, maybe a family member's vehicle that lives on the other side of the state. And then the most obvious one, and what we're focused on here, is driving a rental car. So all of those are vehicles that are not owned by you, but are going to be covered by your auto insurance policy if you are using them with the vehicle owner's permission.
Interesting. So if I fly across the world to Australia or I head over to Italy, is that still going to be the case?
That's why we called it the general rule. Of course, there are some exceptions to that. The coverage territory on the typical auto insurance policy is the United States and Canada. So if you are traveling to Mexico or anywhere abroad, you certainly want to figure out what you should be doing with regard to a rental car, because your auto insurance policy is only going to apply to your vehicles that are listed on it and vehicles you don't own but are using, again, with the owner's permission within the United States and Canada.
Interesting. Okay, so if I'm renting outside of that territory that we're looking at here, then I know that my auto insurance policy is not following me and I need to buy coverage from the rental car agency, correct?
Correct.
Okay, now how do I know what coverages from my auto insurance policy apply if I am in the US or Canada and I'm renting a vehicle?
Yeah, sure. So the best coverage on any one vehicle on your policy is what is going to apply to a non-owned vehicle. So for example, if you've got full coverage on all of your vehicles, that's obviously going to be what's going to apply to a rental car. Maybe you have full coverage on your truck for the winter, but you've got the sports car in storage for the winter, so it only has comprehensive coverage on it. Well, the full coverage from the truck is going to extend to a rental car. Something that really needs to be considered is if you have PLPD coverage, which means there's no coverage for damage to the vehicle itself, on all vehicles on your policy, well, yes, those coverages will apply to a rental car. So you're going to have coverage if you, God forbid, hurt or kill someone and they're suing you for their injuries, but you're not going to have coverage for damage to that vehicle that you rented if you get into a car accident, have it stolen, have a tree fall on it, that sort of thing. So you want to keep in mind the best coverage on any one vehicle on your policy is going to apply. But if you don't have full coverage on any of your vehicles, you really need to think long and hard about the coverage offered by the rental car agency.
Okay, because that best coverage on my policy is not going to pay for damage to that rented vehicle. Correct.
If that best coverage is only PLPD or maybe a vehicle that's in storage,
yeah,
no, it's not going to do that.
Okay, that's a great reminder. Now, that sounds too good to be true and sounds like a pretty simple answer. Is there anything that's not covered by my auto insurance policy when I'm renting a vehicle in the United States or Canada?
Yeah, so let's say you did everything right, rented a car within the coverage territory, the United States and Canada. You've got full coverage on at least one vehicle. The lease or the rental agreement is in your name and you're listed as a driver. So you've done everything by the books. If you get into a car accident, there are still going to be 3 things that the rental car agency can try to recover from you that are not going to be covered by your auto insurance policy. Those are shown on the screen here. Number 1 is loss of use. Let's say the car is in the shop for 2 weeks after the accident being repaired. Well, the rental car agency could theoretically claim their lost rental income from you for those 2 weeks.
And how do they calculate that? At the $40 a day that I got with a screaming deal online? Or are they going to say that vehicle normally rents for $200 a day?
Yeah, that's what they're going to say. They're going to pick their peak season rate and say, we got that at some point, so we're going to charge you for that now. The other one is diminished value. So you now caused a car accident and that vehicle you were driving now has an accident on its Carfax report. So hypothetically, that vehicle is worth a little bit less than it was because it no longer has that nice, clean vehicle history. There's an accident on there. So let's say when the rental car agency goes and sells that vehicle, you know, a year or 2 down the road, and it sells for a couple grand less than course, they want to hit you for everything they can, and they have
could be held responsible for, which your auto insurance policy is not going to pick up. Can I get coverage for those things if I'm worried about them?
You can. So most auto insurance policies will have an endorsement that's available to cover those things. Usually costs about $30 to $70 per year. You could also purchase insurance from the rental car agency. Now, the kicker on that is that if you want coverage for those 3 things that we just previously discussed, they make you buy all of the coverage that they offer. So liability, collision, comprehensive, you have to buy the whole package in order to get those 3 things covered. So you're kind of doubling up. Well, you are very much doubling up on a lot of coverages if you're buying the coverage from the rental car agency. Lastly, I think everybody knows this, but book your rental car reservation with a credit card. It varies from credit card company to company, but there's oftentimes a little bit of coverage or some sort of help that they can provide if you do get into an accident in a rental car.
Got it. Interesting. Okay. So we touched on where are you renting the vehicle? US or Canada, your auto insurance policy will apply. It's going to apply the best coverage that you have on any vehicle listed on your policy. Some of these kind of odds and ends are not going to be covered by your auto insurance, but there are ways that you can secure that type of coverage, not very expensive, if that's something that's concerning to you. Is that about right, Derek?
Yes.
Okay. So what else should we be aware of when it comes to renting a vehicle?
Yeah, well, I would say the biggest one is you have to remember your auto insurance policy applies to non-owned vehicles that you are using with the owner's permission. So if you are not listed as a driver on that rental car agreement, are you legally using that vehicle with the owner's permission? The rental car agency owns the car, and if they rented it out and you're not listed as a driver on that rental agreement, it's very
So if one of my adult children are going to travel with me, and I might want them to drive my vehicle home from dinner or off to the beach somewhere, or maybe from Denver up to the mountains, I want to make sure that that child is listed as a driver on that rental contract, correct?
correct. And you probably also want to make sure that that child has full coverage on at least one of their vehicles, because now, yes, you are responsible for the vehicle because the rental agreement is in your name, but you're relying on that adult child's own auto insurance policy to provide that non-owned vehicle coverage.
Yep.
Since they're listed as a driver on that policy. So yes, absolutely. You want to make sure that all of that is in line.
That's a great point. So anytime there's someone driving the rental vehicle that is not the person on the rental contract, we've got some complications we want to make sure we're aware of.
Yes.
Okay.
Yes,
okay.
absolutely.
What else here?
Yeah. Is it a high value vehicle? You go to Vegas and you rent a Ferrari for the weekend. Probably not going to be covered by your auto insurance policy. Definitely ask your agent about that. Also, sometimes we run into issues where someone is renting a large U-Haul truck. If it looks like a box truck or it looks a little bit like a semi-truck, talk to your insurance agent. There are some restrictions based on the gross vehicle weight of a vehicle. If it looks like the van shown in this slide here, it's probably okay. That size and smaller is generally fine. Larger than that, talk with your insurance agent. Lastly, how long is the rental agreement? Is it really a rental vehicle that's, non-owned by you, or is it more like a lease? If it's a 6-month rental agreement, it's probably going to be more like a lease, and your insurance policy is not going to apply to that.
Got it. Okay, great. And one confirmation question, Derek, that came in on the chat was, it doesn't sound like anyone under age 25 is able to rent a vehicle nor be added as a authorized driver on a rental contract. I believe that that's true most of the time, in which case, when I rent that vehicle, I probably don't want to let my 19-year-old son or daughter drive that rental vehicle because they're not authorized with the rental car company and they're not listed as a driver on that rental contract. Agreed?
Agreed.
Okay. Great. Well, thanks. So let's jump to the conclusion of the rental car coverage section here, Derek. Expert tip number 1 would be that if you're traveling outside of the US or Canada, you need to buy coverage from the rental agency. It's expensive. I've had friends go to South America or over to Europe. Oftentimes you can get around by not driving a vehicle, and many of us don't want to drive in an unknown area. But if you are going to rent a vehicle, you need to buy the coverage from the rental agency. And they might not have the best coverage in the world, but that's the best that you can do. So you need to work with the rental agency to secure the best coverage you can while you're renting that vehicle. Expert tip number 2, don't let someone else drive a car that's rented in your name if they're not listed as a driver on the rental contract. Many times it's going to be a spouse and spouse that rent a vehicle. Spouse and spouse might be the ones that are driving it while they're off on vacation. Generally not going to be a big deal. When it comes to others that are going to be borrowing or driving that rented vehicle that was in your name, that's when the complications can arise. So something to keep in mind, and certainly have a conversation with your insurance agent about so that you can understand what needs to be done ahead of time to prevent some sort of ugly hiccup. Okay. Before we move on, Derek, one more question on the chat. What if the car is damaged? I always heard that the rental car company will charge your credit card for damages, and then it can be difficult to get reimbursed. How would you answer that?
I haven't seen that. I've typically seen someone turn in a vehicle that was damaged and the rental car agency made them provide their insurance information. And I've been contacted by that rental car company and we've submitted a claim and the insurance company has worked directly with them to have it repaired. I guess maybe if you're not able to provide that, they would try to place some sort of hold on the credit card that you used for the reservation. But again, even if they did that, the insurance company is going to work with you and the rental car company to make sure that anything that you paid for the damage to that car that would have been covered by your auto insurance policy is going to be reimbursed to you.
Yeah, absolutely. And that's, it wouldn't surprise me to see that happen given how often you see the $400 smoking charge applied to your credit card a month after your rental. You haven't smoked a cigarette since you were 18 years old, and here you are getting hit with a smoking charge as if you were smoking while you were in the rental vehicle. So they're quick to hit that credit card. It wouldn't surprise me if they did that when a vehicle was turned in with some damage, but that's something to certainly pass along to your insurance agent so that we can get things set up nice and neat from a claim standpoint, get that out of your hands and have the insurance company work with the rental agency to get that all squared away.
Only thing I smoke with regard to a rental car is the tires.
Yeah, I've seen the type of vehicles that you rent on vacation. I don't think you're doing that. All right, on to part two. Replacement cost versus market value. This will be a relatively brief section here, but it's such a common conversation that we're having right now with clients about home insurance coverage. Most of us have a neighbor or a relative or maybe even ourselves who have looked at finishing the basement, adding a 3-season porch, even just doing minor updates to a home. It's really tough to get the attention of a builder, and when you do, you've seen and you know what it looks like in terms of cost for doing that type of work. So we're going to talk here about the difference between
and new at today's labor rates with today's construction material costs. So it's going to take into account things like the style of the house. Is it a ranch or a 2-story? How many bathrooms are there? How nice is the kitchen, et cetera, et cetera. It's just looking at the structure and saying, hey, to build an identical house today, what would it cost? So market value is, of course, a little bit driven based on that. The larger a house, the higher the market value you would expect. But there are also a ton of other things that impact the market value. Things like the school district, the age of the home's roof, the neighborhood that it's in and what houses nearby sold for, how large the lot is it on a river or a lake? A lot of these things impact the market value of a house, but they have no bearing on what it would cost to just build that identical structure if the existing one was to be destroyed. So big difference between replacement cost and market value. But a lot of times we see people kind of mixing those two together and thinking that they're going to be 100% correlated, and they certainly are not.
Sure, interesting. And from an insurance standpoint, again, we are concerned with replacement cost because that's the coverage we want to make sure we have. And replacement cost is all about rebuilding that home brand new. It's not what you could sell that home for today, which again is going to include some of these things Derek mentioned, including the value of the lot. Well, the lot isn't going anywhere, even if the home is destroyed in a fire. So you see these differences from one to the next when it comes to determining the value. Quick kind of comparison in terms of replacement cost and market value would be to look at this cabin on the left. It's got a low replacement cost. It's a small log cabin, probably could be built for $150,000, but it's sitting on a beautiful lake, likely on a very large property. So that has a low replacement cost, very high market value. The home insurance coverage on this cabin might only be $150,000 or $160,000, yet it's sitting on a $5 million market value. On the right, you see a high replacement cost, low market value home. Let's say this is downtown, any undesirable area or an area where market prices are being depressed. It's a huge structure. If you had to rebuild that brand new today, you're talking multiple millions, yet the home might only be worth $300,000 simply because it needs a ton of work and it's located in a less desirable area. So again, the replacement cost is only concerned with the structure itself. It's concerned with rebuilding that structure in today's building market. So if your house is located on the shore of Torch Lake, it doesn't make any difference when you're looking at the structure versus it being in Flint or in the UP or somewhere else, where market value will certainly be different than being on the shores of Torch Lake.
I used to use Lake Michigan for that example, but since those houses are falling in, I changed it to Torch Lake.
That's a good, yeah, that makes sense.
Unfortunately.
Yeah, no kidding. So, Derek, why am I required to insure my home for replacement cost? It's tough to grasp the difference between the two. We've talked about it here, but why do I need to insure my home for replacement cost?
Yeah, it is. And I'll just give a quick example of how that works. You know, I noted here, you're not, but realistically everybody does. And the reason for that is if you want replacement cost coverage for a smaller claim, you have to buy replacement cost coverage for the entire structure. So let's say your home's roof is 20 years old and it gets destroyed by a hailstorm. Well, you need to put a brand new roof on that home. What's the insurance policy going to do? If you've got replacement cost coverage, which almost all of us do, it's going to pay to put a brand new roof on your home. They don't care that it was at the end of its life anyway. They're going to put a brand new roof on it. If the home's roof was 2 years old, they're going to put a brand new roof on it as well. It doesn't matter how old that component of the house is, the claim is going to be paid based on the replacement cost of it. So my example here was a kitchen fire and, you know, the damage to the roof. Everybody wants replacement costs for those things. So therefore, what's the replacement cost on the entire policy? Well, you take all of those components of the home, the kitchen, the basement, the roof, the walls, and you add them up and you say, there's your replacement cost for the entire home. So you want replacement costs on your smaller claims, everybody does. You're going to have to insure the entire thing for replacement cost.
Got it. Interesting. Okay. Give us a 30-second look, Derek, at this claim example where you notice that the insurance company accounts for the depreciation of the property to come to a market value type of claim payment, but then they're going to upgrade that claim and pay the replacement cost so long as there's replacement cost coverage, right? What does that look like here?
Yeah, exactly. So if you see the red circle there, it's showing $1,455. That's the depreciation of the portion of the home that was damaged. Over to the left, you'll see $4,027. That is the replacement cost of that damaged section of the home. So if this person did not have replacement cost coverage, the insurance company simply takes the replacement cost of $4,027, subtracts the depreciation of $1,455, and they pay out $2,572 on that claim. So someone that did not have replacement cost, not only are they covering their deductible, they're now also paying the depreciation out of pocket. Nobody likes that.
Got it. Okay. And we're talking $1,400 here, but on a $50,000 or $100,000 claim or something more significant like that, you're talking a pretty significant difference between how the claim is paid out under replacement cost versus paid out under market value, right?
You might need to come up with $30,000, $40,000, $50,000 out of pocket to cover that, because you can't pay a builder or a contractor to come in and use depreciated materials to repair your house. It's always going to be new. And that's why a lender is going to require replacement cost coverage on a homeowner's policy.
Yeah, sure. Makes sense. Okay, great. So expert tip here, just from general terms, construction costs have risen. We all are aware of that. Market values have too. But from an insurance standpoint, we're concerned with construction costs. So talk with your agent if you're concerned about the amount of coverage that is on your home right now, given today's building costs and where things are headed going forward. That's especially relevant if you've made any updates or additions to your home where we may want to revisit that coverage figure. And with that, Derek, we are 1 minute overdue, 12:26 right now. So we will stick around for Q&A like we always do, but we want to be respectful of everyone's time. We promised 25 minutes, and here we are at it. So before we move on to the Q&A, we want to provide a thank you to everyone that joined us today. Those of you that work with us and those of you that don't, we're glad to have you here. We appreciate your time and your trust and all the camaraderie that we can create together. So thank you for being with us. We appreciate it, and we will stick around and happy to chat in as much detail as anybody would like. So